This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap Podcast. I'm your host, Robert Kraft. Thank you all so much for the continued support and for tuning in. If you like what you hear on Planet MicroCap, please take a moment to rate us 5 stars on Spotify or Apple Podcasts. It really helps more folks discover the show and join the MicroCap investing community. Registration is now open for the Planet MicroCap Showcase Toronto, happening October 21 through 23, 2025 at the Arcadian Loft in downtown Toronto. Whether you're a seasoned investor or just getting started, you'll want to be there. Visit planetmicrocapshowcase.com to register, and I'll see you in Toronto. Now, my guest for the show today is Ryan Telford. He's the head of evidence-based research at MicroCap Club. In this episode, Ryan breaks down the performance and methodology behind the MC Guts MicroCap Index, a quant-driven benchmark launched by MicroCap Club to track microcap stocks in the US, Canada, and Europe. We discuss why Canada and Europe are outperforming while the US lags in 2025, sector rotation, and how Ryan's Guts framework, growth, undervalued, timing, and sentiment, identifies overlooked opportunities in the microcap universe. Ryan also shares how the index filters for quality, liquidity, and momentum, and how his research is challenging some of the conventional wisdom around dividend pairs, ROIC, and the 52-week low strategy. Thank you again for tuning into the Planet MicroCap Podcast, and please enjoy my conversation with Ryan Telford. Ryan, thank you for joining me today. How you doing, man?
Well, Bobby, thanks for having me again.
Absolutely.
Appreciate it.
Absolutely. It's great to have you here. So, look, every year we usually do like kind of a mid-year or end of year-end look of what's going on in microcaps. And I usually like to invite on folks that are, have an index or, active portfolio where you're really kind of measuring against the benchmarks, just really to get a flavor of what's been going on in the markets. So, you're now that head of evidence-based research at MicroCap Club. You just launched the MC Guts MicroCap Index. So I wanted to invite you on here to kind of go through what's going on and whatnot. So you prepared a beautiful presentation. For those who are watching on YouTube, I invite here you go. And then also, if you're listening in, I invite you to go check it out on YouTube. Ryan's put together a nice presentation with some nice visuals to check it out. But, to start off, Ryan, give us that quick overview of the MC Guts MicroCap Index, and then maybe we can get into some of the year-to-date performance.
Oh, sounds good, Bobby. Thank you. All right. So the MC Guts MicroCap Index, what is it? It is a quantitative index for microcap stocks in Canada, the US, and Europe, in partnership with MicroCap Club. We track this monthly. Been tracking it now for a few months. So please, there'll be a link later on. You can go to the site, check out some more of the details. So GUTS stands for growth, undervalued, timing, and sentiment. These are 4 main factors that I use in my own strategies, my own investing strategies, and I found that they really do work well over time with microcaps, especially when they're working together in tandem. So, how are we doing YTD? So, this table here shows the MC Guts performance. We started tracking in April. It was 4.2% in April, and single digits, and actually 16.5% YTD from January. That's in US dollars. And then we also have a separate strategy beneath that, which actually goes up to the MC Guts, US, Canada, and Europe. Yeah, we've seen some interesting things here. So basically in April, it was Canada led the charge, with US and Europe being just above zero, Canada 3.7%. Continuing that on into May, Canada taking the lead. But then finally in June, the US took the lead, and then Canada and Europe taking second and third. Still quite good returns. As we're going to see, YTD, just the US strategy itself, still a bit in the red, minus 3%. whereas Canada and Europe are well into the teens, double digits, which is quite good. We can get into some more details below. I mean, just for perspective, I mean, IWC, the MicroCap Index, minus 1.6%, S&P 5.5%, and good old NASDAQ 8%. So yeah, I mean, overall 16.5% YTD, really not too shabby. It's in US dollars. So yeah, so far so good.
Yeah, hey, all right. Some decent performance, right, for the first, year to date. So let's talk a little turkey. I mean, do you want to go through some more data first, and then we'll get into the why and start speculating on what's going on?
Yeah.
Here, all right, share some more data. Here you go.
Definitely. So this is a nice sheet that we have for MC Guts. This is essentially the combined strategy, US, Canada, and Europe. This is about 240 stocks, 100 in US, 100 in Europe, 40 in Canada. So this shows the historical performance since 2015. CAGR of about 19.7%. So again, not too bad. Up against the IWC. So what's interesting here about this strategy is that if we jump down to the bottom, this is called the percentage beating the Russell Micro. So historically, right here, we got 93% of the time, actually this strategy outperforms the IWC when it's a down market. And I guess as we've seen, year to date, IWC has been pretty down. I mean, we're minus 1.6. So historically speaking, what we're seeing in 2025, the strategy 16.5% is doing what it's been doing historically. And there's like we saw a little dip here in about Q1, Q2, and then a nice little pop in the last part of the first half. So that's interesting. That's always something that's interesting to take note of in any strategy, is how it does in up markets and down markets.
Absolutely. All right, so let's look beyond the numbers a little bit. Obviously the MicroCap Guts strategy has, I mean, you've been very humble in terms of, it's done well. It's done quite well,
Right.
and especially compared to the to the broader indices. High level, what do you think are some of the reasons why not just this strategy, but maybe if we could even take a step further and zoom out, microcaps in general have performed the way they have in the first half of 2025?
Sure. I mean, geopolitics, I guess, is one of the first things that comes to mind. I mean, if we just break this down further, so if we look at the US, this is the same strategy, just the US, 100 stocks. And as we saw in the first slide there, I mean, yeah, the strategy's been hurting, minus 3%, even a bit lower than the benchmark. So, I mean, I think, I don't want to get too political here, but just with some of this tariff activity, I mean, it seems there's been more harm done to the US than globally. And perhaps even there's been some capital moving out of the US into other markets. That's a possibility. Because when we look at Canada in particular, it's up 17% for the year, and even the benchmark S&P TSX 60 9.4. But this strategy here is interesting, and what I can say, just looking under the hood with this particular strategy, there is a lot of gold in this strategy right now.
That makes a lot of sense for sure.
Yeah. So I mean, I don't know if who in the audience saw my keynote in Vegas, but when you look at microcaps across the US, Canada, and Europe, definitely in Canada, it's a very high concentration of resource stocks, mining, energy. So with all the gold miners in Canada, I mean, if they're profitable, even if they aren't profitable, a lot of these guys have been just on fire, posting double-digit returns year to date. completely taking advantage of the gold price, which is, I think, 3,400 and change now. So again, gold being that safe haven, I think is explaining much of the Canadian performance.
That actually makes that kind of plays as well, because like, I mean, look, sometimes we're a generalist pod and we cover the markets in general, but exploration resources sometimes we don't cover it as much. So sometimes even for me, I'm like, oh, well, index, obviously most of the Canadian markets are made up of, gold, because you would have thought the opposite with all the tariff stuff that was going on in April. I remember right before Vegas, we had all these Canadian companies like, oh no, like here we go.
Right.
They're all just like,
yeah.
Like, oh no, we got all the tariffs going on.
What are we
So
gonna do
sorry.
here? Exactly.
And so like you think about the performance, then based on everything that was going on, you're like, how is Canada not upside down as well? But then you forget, like, oh yeah, well, resources kind of kick butt first half of the year, to say the least.
Yeah, no, it definitely is interesting. I guess even within the strategy and just some of my other strategies that I follow that are similar. I mean, some of the, even if they're not gold, I mean, some of the tech companies, tech microcaps, even some of the favorites on Twitter, some of these really small microcaps still seem to be thriving. So again, I don't know that the tariff talk has really impacted them yet, but hey, that's a moving target. So
yeah, what's the new date's August 1st, right? I think someone.
Let's see.
We'll see.
yeah. You just never know, right?
Yeah. So let's look at Europe too. What do you think's going on
Sure.
under the hood here?
Yeah, so in Europe, it's also interesting. I mean, we've got 19% year to date. And then even the Europe small benchmark, I can't recall the ticker, but I can get it for you after, is done well too. I mean, low double digits with the gut strategy, beating it by about 6 points. So, I mean, this is a bit more mixed bag than Canada. I mean, it's more distributed. So, I mean, this one's a bit more difficult. I mean, it could be that capital, again, is moving out of the US to Europe. I mean, Europe has that stigma of being Euro poor. If you invest in Europe, you're going to be Euro poor. So there's this perhaps idea that it's very lowly valued, and it is. A lot of sectors have very low valuations. So maybe investors are starting to look more globally, see where are the opportunities, where are their cheap stocks. They're definitely in Europe. That being said, I mean, if you look at the Europe gut strategy over time, I mean, when you compare it to even the small index, I mean, it's usually beaten the small index by 10 points or more each year, even 2021, well, even higher, but that was a thriving bull market in many places. But overall, it's the strategy's managed to find those kind of diamonds in the rough, if you will.
Very good.
Europe.
All right. So, I mean, and what was like one of your main takeaways? You're looking at the day, like we were talking about this ahead of time and, looking at the mid-year. I mean, what was some of your big takeaways that maybe even surprised you based on looking at the data, based on saying, oh, wow, microcaps, just based on your index have done quite well compared to the larger indices. What were some of the other takeaways that you were like, oh, that's interesting. I didn't expect that.
Yeah. I mean, really when it comes to Europe, I mean, this is relatively new for me personally. And I've been quite surprised with how well microcaps in general, I mean, even the benchmark's done okay. But the strategy in itself has done quite well. I mean, I've got different speculative reasons for that. Maybe quant strategies aren't as popular in European markets. I mean, in US and Canada, they're pretty established. So the alpha isn't as high. But in Europe, I mean, there seems to be opportunity there. And I actually just on your pod the other week with Thomas, he mentioned that even within Europe, I mean, there's different languages, right? So even within Europe, You may not speak the language of certain companies that you're following. But the one thing with quant is that it's a universal language. You don't need to speak French or German or Italian. It's just about the numbers. So I think there's an opportunity there with quant that hasn't maybe fully been exploited yet. And that's just a couple of reasons why I think.
Interesting. Okay.
Yeah.
Well, I mean, for those that missed, I invite everybody to go check out the keynote that you did in Vegas. Phenomenal job. You went through the whole strategy and everything like that. But maybe take a couple minutes here, go through the actual approach, the portfolio construction, because I think that'll also give folks a better understanding of like what's going on under the hood that drove some of these the data and performance for the last.
Yeah, of course.
Yeah.
No, thanks, Bobby. So as I said, the strategy is, we'll call it semi-global. It's essentially 3 strategies: one for the US, one for Europe, one for Canada, and it really does focus on those four criteria, which I showed up here: growth, undervalued, timing, and sentiment. Really, all of those combined can tend to do interesting things over time. So when we go back, and I'll get into some of the mechanics of that, but before we get there, the other part is we really want to focus on liquid microcaps. I mean, in microcaps, you've got a lot of really tiny, really illiquid stocks that are really difficult to manage, to buy, to sell. So we really want to try and stick to those that have at least some liquidity. Liquidity means different things to different people, all depending on your capital base, how patient you are. But just in very specific terms, we have very set rules for liquidity. And we're looking at about 4,000 stocks globally. So it's a pretty decent pond to fish in, so to speak. And then we're looking about.
Hey Ryan, real quick,
Yeah.
not to cut you off, but real quick, what is the liquidity measures for this strategy?
Yep, it's right here. So it's basically for each region. We're looking at 10 cents or $10. 10 cents per share, $20,000 or euro daily volume, and it's just very important. We do exclude over-the-counter pink stocks just because we don't have to deal with those and skew the numbers with maybe stocks that we couldn't actually buy or sell.
There's so few utilities companies. I totally understand getting rid of that. And then REITs, it's like
the utilities, financials, REITs, we don't even bother with.
The REIT. Most of I like we were playing around with an index for a while, and like REITs, I think they barely traded, but if at all. My goodness. In microcaps, like very low. They never traded. It's like the same 10 companies literally every time we rebalanced. At least on the utilities for sure too. It's like, oh, they're down 68% this quarter. Like, welcome back. You're in. Because there's only 10 of you,
Yeah, exactly. It's a tough one.
Yeah.
And then we trade in their native currencies too. So the US strategy is in US, Canadian, in Canada, Europe, and Euro. But when we do combine them into the main strategy of 240 stocks, we do show it in US. So there is a bit of currency effects there. We don't apply any currency hedging, at least not yet, but just something to be aware of. All right, Guts. So for those of the audience who are familiar or aren't familiar, is ranking. So it's an important tool in quant strategies. So where a screen is something that you set very specific rules for, like I want a stock with more than 10% EPS growth. I want a stock with a PE of less than 10. That's one way to do it. But with ranking, it's more comparative. So you're essentially ranking all stocks on all factors compared to each other. So we do that for each of the main factors: growth, undervalued, timing, and sentiment, which we'll get to the specifics in a second. And then each stock is essentially given a score from 0 to 100. And then you buy the top top positions. So in the US, we buy 100 stocks. So you buy those 100 top ranked stocks, equal weight them, rebalance them monthly, and that's your portfolio. Long only. So there's no shorts, no hedging. It's relatively simple that way. And that's how we get our positions.
Right. And one thing to also clear up, because as you said, like for Canada, you know, when you looked under the hood, it was heavily weighted mining. So it's not, you're not because for instance, where we did it was like we took the top all 11 sectors and then took like the top 50 or top 20 from each based on performance for each
Right.
sector.
I see.
You're not breaking it down like that. It's more just like, here's the top 100. If there's 80 of them are
Yeah.
mining, 80 of them are mining. It is what it is.
That's a great point. Yeah, it's essentially sector agnostic.
Okay.
So I mean, so it can be overly weighted in a particular sector industry at any given time, and that's a pro and a con, right? I mean, when there's strength, you're going to benefit, but when things turn the tide, then you may get caught a little bit. Then the system has to catch up. But I mean, that's part of the game.
But if you rebalance monthly, it's not like, okay, if sentiment does change, it's not like I mean, March 2020 was a black swan event. Like you're not going to see stuff like that very, very, very often, where it's like 2 weeks, everything the bottom fell out. So when you rebalance monthly, if sentiment does change, you're not caught with your shorts down for too long.
No. It's not.
That's the idea.
No, that's one of the reasons for the monthly rebalance is to just get some good turnover, some healthy turnover. Again, it's not particularly high. I'm just going to go run over here to okay. So for the US, we're at 56% turnover.
Oh, there it is. Okay, I see.
For a quant strategy is pretty low. I mean, again, what's high and low depends on each person, but compared to some of my own strategies, that's fairly low. In Canada, it's 53, the same. A bit higher in Europe, 74. But to your point, yeah, we try and keep the turnover in a healthy range just to get out some of those stocks that have had a turn, maybe had a bad earnings report. Interesting. There's been some sentiment that we want to steer clear of.
So when you were looking at the U.S., you saw the U.S., compared to Canada and Europe, it clearly underperformed. I mean, what were some of this? What was the weighting sector wise for the first 6 months or on a more monthly basis that maybe can explain? Like for instance, maybe just it happened to be heavily weighted in tech at the beginning of May, and now tech sentiment changed, and as a result May stunk. Like what was looking under the hood for US specifically, like what was it that underperformed that was doing well maybe earlier or whatnot?
Yeah, I'd have to actually go back and check that, Bobby, and just see exactly how the sector kind of changed over time.
Okay.
But what I can say, what I noticed in the US in particular, was two things. There was a lot more dilution happening. There's a lot more stock offerings. So a lot of stocks were getting hit that way. A bit more than I was used to seeing in previous years. And second, again, in the US, there's a lot of earnings misses for companies. Which is one, but they seem to be punished a bit more severely than, say, a miss a year ago or two. So I'm not sure if that's the market's way of saying, okay, you missed, now we're out of here. Let's go to Canada. Let's go to Europe. So there may be some other dynamics there.
Yeah, I'd be curious if maybe that's where you see the geopolitical situation playing out, where it's like, all right, well, I don't know. I'd be curious. I'm be curious to go back through a few of those press releases. I'm like thinking back through a few of the U.S. names that I know and we're following closely, and I remember seeing a few of the results being like, well, because of tariffs, or like there's always I mean, there's always some kind of excuse at some point, especially if there was an underperformance when they expected a little bit more. But, I'm trying to think this year's was, I think, really very tariff related, or at least use that as an excuse of like,
Yeah. Yeah, it could be tariffs or maybe even not. I mean, just the fact that someone missed.
Still supply chain
and stuff. Yeah. Investors like, all right, let's get out of here.
It's a lot. It's a lot we could speculate on, but it's worth talking about just because I know there's some folks listening like, all right, what is which sector was what sectors was it like? Because I mean, there's a number of contrarians that listen into and be like, all right, that's hated right now. Interesting. Let me find the best within that, and maybe there's an opportunity there, So
yeah,
yeah,
absolutely. Yeah, just a shout out here. So portfolio 123 is a platform that I use on the MC Guts and all the research that I do on MicroCap Club, which we'll get to later. So they've got great tools, all the data, portfolio 123. So if anyone's curious, urge you to go check them out. Okay, so the guts of guts. We've got basically growth. So two factors really: sales. I mean, top line, it's nice and clean. And for a microcap in particular, I found sales can be quite helpful. I mean, it shows you where the company's going. You can track it over time too. Especially a lot of microcaps are cyclical, so you can kind of see their sales pattern and try and figure out if they're entering a trough or a peak of their cycle. So you kind of want to try and be on the positive side there. Then of course, earnings growth is really important for growth in market caps. Undervalued. So market caps, yeah, I mean they're low value stocks by nature. They have very low valuations, so they're usually cheap for a reason. In quotes. So really a low valuation by itself doesn't really tell you a whole lot, in my opinion, but when you combine it with these other factors, growth, timing, and sentiment, it can provide some unique opportunities. And then of course with some nice multiple expansion, try and get a nice low valuation, wait for that PE to increase a little bit, help boost your returns. Timing. So you can't time the market, is what they say. Macro wise, yeah, it's extremely difficult. I have no qualms there, but definitely when it comes to stocks, I mean, I think timing your stocks is quite important. I mean, when you buy and when you sell are two important points of time and completely determine the return, whether positive or negative. So definitely price momentum is a big one. I mean, stocks that have already got some interest can be a nice signal. Then, of course, fundamental momentum too. That was a good one. Sentiment. Yeah, this is this. I think a lot of people think of sentiment as being very qualitative, which it is. But I mean, you can also measure it quantitatively. Analyst ratings are quantitative. Ratings 1 through 5. How those ratings are changing. It's in the data set which you can use. Short interest. What's the short interest on a stock? A stock that's highly shorted might not be ideal. At the same time, if you want to even go that way, there could be a short squeeze. That's something beyond this particular index, but certainly something to consider. And then institutions. I mean, the fun thing about microcaps is that they're just getting discovered. So oftentimes when institutions come in, I mean, there could be signal there. At least in theory, institutions they're kind of the quote unquote smart money, big money. They've got the resources. So what they're doing could be a signal. So that's guts in a nutshell. GUTS.
Very good. All right. So next thing I also wanted to cover, you're running this is like the, in partnership with MicroCap Club. you're starting to create a lot of content around that. So can you go through some of the work that you've been doing on MicroCap Club using the MC Guts Index as your basis?
Sure. Yeah, no, thanks, Bobby. So yes, for about the last 6 months or so, I joined MicroCap Club, joined Ian and his team, and we started this evidence-based research forum. And so what the idea is here is to post different research ideas based on quantitative research, just as they pertain to microcaps. And really, like the MC Guts, we really want to focus not just on the US and Canada, but Europe. I mean, it's a massive playground of microcaps. So all of the research that we do here, that we showcase for US, Canada, and Europe. So I think we're up to about 22 different articles now, research pieces. So here's just a few highlights. The MicroCap roadmap. It's really interesting when you look at microcaps. I mean, they go from pre-revenue, tiny illiquid names, all the way up to highly profitable and growing, and maybe to be acquired. So there's quite a massive range in them. So we like to show graphically where the stocks are in the universes. ROIC is a really big factor for a lot of investors, white caps, large caps, mega caps. So yeah, it was fun. This was a fun piece. Went into microcaps, looked at 5 different factors around ROIC, different variations. ROIC itself, ROIC, incremental invested capital, and then some other capital allocation factors, and showed some interesting results for microcaps. What else? 52-week high, 52-week low. There's always a fun debate. Which one's more bullish? A value investor will say the low. Growth investor will say the high. So we just ran some tests and we saw which one historically has outperformed. I guess spoiler alert, it's not the 52-week low. So yeah, institutional ownership. That's a good one. That's the signal that we use in MC Guts as part of the sentiment. Dividends. You don't usually think of microcaps as dividend stocks, but there are quite a few actually. And I guess you could say there's good microcaps that pay dividends, and then there's not so good microcaps that pay dividends. So we look at some of the different factors that help differentiate those two types. EBITDA, VS earnings, as the great Charlie Munger called them, as one version of earnings that a lot of investors use. How effective has it been? When we look at EBITDA, we look at EBIT, operating income, different types of revenues and earnings, and just see which have really worked well for the microcaps. And others. IWC, that's usually the standard benchmark for microcaps in the US. When you peel back the layers, look under the hood, it is kind of has some interesting qualities to it. And it's highly weighted in biotechs, healthcare, and financials. It's actually it's more also highly weighted to small and even mid caps. And then a lot of the companies aren't even profitable. So there's a lot of different features of it that may not be the best benchmark, or at least not what someone is looking for. So actually, this was one of the reasons why we also wanted to create our own index or benchmark with MC Guts.
Very good. So
yeah, there's lots more.
My God, yeah, there's you've already
go there, and yeah, we've got lots.
Yeah,
lots to come as well.
Yeah, you've churned out a bunch so far. I mean, like I'm pulling it up, like the most recent one you did. You published the new magic formula for microcaps. Because all of this is behind all of what you're talking about is behind the paywall. Or if you're a member, you get access. But if you're a subscriber, this is all behind there. So the only way you'll be able to get access to anybody who's listening that's not a member is becoming either a member or subscriber to MicroCap Club.
Correct.
So
Yeah.
let's give the audience a little taste. Like the most recent one you put out there is the new magic formula for microcaps, based on a little book that beats the market. Tell us a little bit about this article and some of the findings that you found, and basically it's a rejiggering in some respect of the magic formula offered by Joel Greenblatt.
Yeah. No, it's essentially we took some of our findings from the ROIC, which is the third one here. So we replaced Greenblatt's quality factor, which is the return on capital, used our ROIC factor group. And also for the value in this piece, in the bullshit earnings, we have a hybrid value factor, which has worked out well. So we combine those, and seems to produce a nice little improvement to the magic formula for at least for microcaps over the last 10 years. So
very cool. All right. I mean, we've covered a lot. I think, I'd love to do this, even on a quarterly basis to kind of get a better idea of what's happening in microcaps. But, close this out. It's a great quote. Sorry for those not watching on YouTube. It's a Charlie Munger quote about, EBITDA being the bullshit earnings. But, final takes, Ryan, based on, everything that you're seeing, anything that you've been doing this a long time, you've been running various different quant strategies, does anything that you're seeing in this first half of 2025 remind you of other periods at some point, in the last 10, 15 years, or is 2025 kind of unique onto itself? And what might that tell you about maybe what's coming? I know it's like a 10-part question.
Yeah, it's a good question. So, definitely
really laying it on you at the end here.
Yeah, right at the end there. No, great, or a very interesting 6 months. I mean, I guess you could just, to sum it up in one word, just volatility. I mean, the volatility that we've seen is something else. I mean, in the U.S. microcaps, we've seen a lot of downside. We seem to be turning around, and a lot of upside in Canada and Europe. I mean, I think now that we have a better idea of what tariffs are and what the impacts are, I mean, trying to understand microcaps in particular and just seeing how they'll be impacted, if they'll be impacted, I think is going to be part of the next chapter or the next half of this year. As I said before, the market reactions to earnings misses and things like this has been a bit harsh. So just trying to understand exactly some of that is something I'd like to spend a bit more time on. But to answer your question, it's kind of a unique period. It doesn't really remind me of other periods. Every period is kind of unique. But it's interesting.
Very cool.
It's interesting.
Oh, well, that's a good place to end it, Ryan. Where can folks, you have it pulled up right here, but for those not watching YouTube, where can folks go to get in touch with you to maybe get some more insights, learn a little bit more about the Guts Index, and get in touch with you?
Yeah, no, of course. I'm at MicroCap Club. Just look up my name, head over to the evidence-based forum. I'm there too. And then on Twitter and X at @rtelford_invest. I post there pretty regularly about microcaps, and then large caps too, in quant strategies and other various musings. So be glad to hear from new people and regular listeners too.
Very cool. Well, Ryan, thank you so much for joining me today. Really do appreciate it. Good luck. Stay safe, and look forward to our next chat.
Sounds good, Bobby. Thanks a lot.